After step 7, when we have the adjusted trial balance, we can use it to prepare financial statements. And the first financial statement to be prepared is income statement. Next one is statement of stockholders' equity, then balance sheet. The other two financial statements I will introduce later. Statement of cash flow is derived from both income statement and balance sheet. So when we have income statement and balance sheet, we can prepare statement of cash flows. Now, first, how to prepare income statement? Let's revisit the adjusted trial balance. In the adjusted trial balance, please pay attention to the part I circled. The lower part of adjusted trial balance, I only include revenues and expenses. So these are all the accounts should be reported in the income statements. We basically reorganize the information in this block, and then we can prepare income statements. The income statement is a statement of flow, while balance sheet is statement of stock. This income statement includes two revenues. One is sales revenue, one rent revenues. These two revenues are from here. Total 6 expenses, they are all here. 1, 2, 3, 4, 5, 6. There are also intermediate components. Gross profit, which is the difference between sales revenue and the cost of goods sold. After we subtract all the operating expenses, we have the operating income. That's the second intermediate component. Following operating income, we report other income and expenses, which is not related to the company's ongoing business. There's supposed to be income tax, but this is just during the year, just for 1 month. So there's no income tax expense included. After we subtract the last expense, we have the bottom line of this income statement for July 2024. The profits 2,917. The reason income statement is the first financial statement because we need these results for the next one. Next one, statement of stockholders' equity. This is the statement of stockholders' equity. It discloses the change of contributed capital and earned capital. Contributed capital plus earned capital, that's total stockholders' equity. And because this company is a new company, all the balance for contributed capital and earned capital start from 0. So their total also start from 0. That's the beginning. Then next section here, I circled, these are changed. The company issued common stock $60,000. The investors' claim increased $60,000. So common stock ending balance $60,000. This is a change. And the retained earnings is the net income subtract dividends. Profits was 2,917, but 1,000 was paid as dividend to the shareholders. So there was only 1,917 left. So they're retained on the balance sheet. So the ending balance of stockholders' equity is sum of both. We have 3 inputs. One is the issuance of common stock. 1 net income, 1 dividend. These two we can borrow from the adjusted trial balance, while this one was from income statement. The purpose of statement of stockholders' equity to report the balance and the changes of contributed capital and earned capital. Finally, we have these 2 accounts needed for the balance sheet. Balance sheet, we can basically borrow the rest information from adjusted trial balance. For example, the assets parts, this line above, all the numbers are borrowed from here. If we just reorganize into the format of balance sheet, it includes 6 assets. Office equipment includes its control accounts. So 6 assets: cash, receivable, supply, inventory, prepaid rent. That's 5 current assets, office equipment and control accounts. So the net book value of equipment is 11,800. So these numbers are all borrowed from the adjusted trial balance. Following the accumulated depreciation, under this black line, we have all the liabilities and contribute capital. See, we don't have the retained earnings. Retained earnings as the earned capital we have reported in the statement of stockholders' equity we just did, 1,917. So, balance sheet, we have all the liabilities, common stock, retained earnings. In a footnote of balance sheet, here it also provides the procedures similar to the statement of stockholders' equity, this column. So that's the preparation of balance sheet. So basically, all the 3 financial statements are from the adjusted trial balance. We start from income statement, then statement of stockholders' equity, and finally balance sheet.